PayPal Holding Inc. PYPL stock. It plunged during the session of the 2nd of February 2022, lost 24.54% to close at 132.65, and then this post-market / pre-market session of the 3rd of February, it is at $128.90. This came after the company issued earnings outcomes that missed bottom line estimates and issued a weaker than expected current quarter forecast. The payment services staple reported fourth quarter earnings of $1.1 per share, missing Wall Street's expectations by a penny, alongside a revenue beat. Weighing on PayPal stock is an ongoing transition from former parent company eBay, which is moving to other forms of payments. So we can also see here that the company's issues run deeper than its exit from eBay, as illustrated by the following points. Most troubling is PayPal's net new active accounts guidance for financial year 2022. After adding 48.9 million net new active accounts in financial year 2021, the company is forecasting only 15 to 20 million net new active accounts this year 2022. Furthermore, during the earnings conference call, the financial officer of the company, John Rainey, stated the company's goal of achieving net new active accounts of 750 million by 2025 is no longer valid. You can see why, amongst other things, the stock will be plunging. Rainey and CEO Dan Schulman tried to calm investors and analysts' concerns, commenting that the projected drop-offs is partly by design, as the company focuses on driving revenue per account higher. While dialing back on incentive-based marketing campaigns, minimally engaged accounts are expected to roll off. So it's notable that Q4 payment transactions per active account were actually higher by 11% year on year to 45.4%. So that's a positive. Perhaps the increase is mainly attributable to higher value accounts, but the sudden shift in strategy is definitely catching many people off guard. Yes, it seems that that is the case. In the light of the solid earnings reports from the credit card companies and the magnitude of the expected drop-off in the net new active accounts growth for PayPal, it seems fair to assume that intensifying competition is taking a toll on the company. PayPal's issues aren't limited to fading revenue and net new active account growth, as non-GAAP operating margin contracted by 290 basis points year on year to 21.8%. The company's Q1 and financial year 2022 earnings per share guidance fell well short of expectations, indicating that the margin pressures will continue. This concern is mitigated a bit because PayPal's financial year 2022 earnings will be negatively impacted by higher taxes and the provision build for more normalized credit growth. So yes, things are going on for PayPal. So analysts were quick to respond to the event with downgrades from Raymond James to Market Perform from Outperform and BTIG to neutral from buy. No fewer than 17 analysts slashed their price targets as well, with the lowest from Jeffries to $145 from $200. So unsurprisingly, on the options pit, a lot of activity took place there. 92,000 calls and 87,000 calls exchanged hands during that session, which were 12 times the average intraday amounts. So most popular were the February 4th 130 strike put, followed by the $120 put for the same series, with new positions being sold to open at each. So we can see what's going on with the stock. This is the underlying trend for the last 6 months. You can see that. Yes, this is the underlying trend, and It is now gradually approaching its 2-year low. On we can also gradually, I think we can see there's a 52-week event, I believe. There may have been a 52-week event that was reported. Yeah, 52-week low, you can see that. Yes, price triggered a new 52-week low event of $132.92 at almost the close of the session, 3:52 p.m. Okay, so yes, this is where it is, 52-week low, and also approaching the 2-year low. The 2-year low is around $83 or thereabout. So it is gradually pursuing that. This is the 2-year low. This is where we are for the 2-year low. You can see that it is $86.003. So still pretty much very much far away from that, but yeah, well, the company is aware of all of these things, and I believe they will do their best and turn the ship around. They have the preeminence and they have the influence. They can do things like influencing the policymakers to ensure that the US embraces open banking. It is something they have been doing elsewhere. You can see that, So as far back as 2018, people were asking if PayPal has a banking license. It says the US payments giant is edging towards traditional banking with its new product lineup. Okay, seeking to serve the underbanked without a bank. Okay. So, but PayPal itself has no plans to pursue banking license anytime soon. But who knows? That was as far back as 2018. And elsewhere in Europe, you can see, I think it does something like that, something close to that sort of thing. Yes, it does. It takes advantage of. It leverages the benefits of open banking to offer seamless transactions in Europe. So it's just a turnaround. It's facing the outcomes of moving away from or departing from eBay and all that stuff. So in the coming sessions, in the coming quarters and years, things are likely to improve. So what we can see below here is that momentum over the last. This is the 1-year chart. Okay, let's update it and get the exact picture of that momentum over there. Okay, let's see. So let's see what the momentum is. It seems it's okay, maybe waning or strongly bullish. Maybe waning, I think. Accumulation distribution is waning. It appears to be in a strong bearish trend. Shares are below a declining 200-day moving average, and the MACD is beneath its signal line. It's lagging the S&P 500. Momentum is improving. Okay, the 14-period slow stochastic oscillator is rising as investors begin to purchase shares. Are they buying this deep? Okay, well, maybe probably even with this 24% retracement, maybe some market participants are looking beyond this disappointment right now. So the volume for that session was heavier than usual, trading 136.263 million shares versus an average of 10.409 million shares per day during the last 12 months. The unbalanced volume indicator is bearish. The slope of the indicator is negative and suggests that there is a lack of buying interest. So all in all, there is a lack of buying interest, but at the same time, some buyers are equally buying the stock. So yes, it is definitely gradually providing a good buying opportunity. I'm sure market participants will be waiting for it to retrace all the way down to double digits. And let's look at the short interest. I don't think it's any wonderful. It's not that wonderful. The short interest for PYPL doesn't look that wonderful. Let's get it. It's not that wonderful. See. Let's get it elsewhere. Current short interest is 17.79 million. I think it's about 1.1%. Let's get let's get it here on yeah, it's saying 1.52%. Okay, on in the dark pool it's 57.29. So it doesn't look like it's a lot, but it's gradually presenting a good buying opportunity, you know. So as I indicated earlier on, I can imagine that market participants would want it to retrace further, would want it to get a lot cheaper, you know, because this company is not going away anytime soon. So see what you make of PayPal stock, and thank you very much for watching this video.